I recently took this trade on XAU USD, and this trade made me over 6K dollars. But here is the truth. It wasn't just the strategy that made this possible. As we continue in this video, please do not skip any part of it. Watch this video to the end. You will learn a lot of things that made this to work together with the strategy. You are not losing because your strategy is bad. You are losing because you are missing these key things. Some of you traders are jumping from one strategy to another strategy, thinking that the next strategy will finally work. But the truth is, the problem is not your strategy. The problem is your mindset, your risk management, your emotions, and the way you react to the market. And until you fix this, no strategy will work. Let me be honest with you. A good number of traders losing money in the market today, they are not losing because they don't understand how the market really works. You can have the best strategy in the world, but if your mindset is wrong, your risk management is poor, your emotion is still controlling you, you will still lose. And this is something I see every day with the traders I work with. Once we fix these areas, everything changes. In this video, I'm going to break down the reason most traders fail. And once you understand this, your whole perspective about trading will change. I'm Juliet, and this is Finn's book, where I teach real trading, real psychology, and how to stay consistently profitable in your trading. If you are coming across my video for the first time, or you've been watching, you've not subscribed, please hit that subscribe button, click the notification bell, and help this channel by sharing this video so that algorithm will be able to push it more to a wider audience. Let's dive in. First is mindset. Most traders come into trading with the wrong mindset. They want fast results. They want to make quick money. They want to flip small capital into big amount of money overnight. Once you join trading with this type of mindset, what happens is this. When you lose one trade, panic sets in. When you lose two trades, you become frustrated. When you lose three trades, you start doubting yourself and start doubting the whole system. You doubt everything. Once you start doubting everything, you will leave the strategy you are using, jump into another strategy, and the circle continues without improvement. Another thing is when the trade is moving. At some point, you know that it will not just go straight to hit your target profit. It will definitely sometimes push to the upside and to the downside. Sometimes it range. That was exactly what happened here. When this trade peaked, I was actually discussing with a prospect who wanted to see my account size, the account size I used to enter this trade. So before I could screenshot this setup and send, and came back to screenshot my MT5 on my phone, that's the account, I noticed that the profit I made from here has actually gone down. I think from about 800 and something dollars to 200 and something dollars. Now, this is the reality of what happens to some of you when you are on a trade. You see that the trade has given you profit. When the trade starts retracing, the next thing you do is to close that trade. Now, why you did this is because you are not really sure of the direction, you are not really sure of the setup, you don't even believe in yourself. That's the reason you do things like that. So I didn't panic. I know that this trade met more than 5 of my confluences. So I have no reason to close it. It keep dragging its legs up and down until finally it peaked. Another thing you people do not know is that market, whenever it's consolidating, just be patient because a lot of you traders lack patience. Be patient enough because that moment you say, oh, this thing is not ready to move, you just close your MT5 or you close your trading app. The next thing, when you open your trading app, you see that there's a massive run up or massive run, depending on the direction of the market. There is a massive pump. A lot of people waited for this trade and they actually missed it because this thing happened during the Asian range. So whenever price is ranging, do not panic. If you look at this, you can see that this price actually returned back to the entry point. Almost. It almost returned back to my entry point. But I wasn't bothered. I wasn't shaking. At the end of the day, it hit the target. Because it's a game of probability, see losses as lesson fee paid for the market to teach you what you do not know. See losses as shop rent or overhead expenses or costs that you need to incur as a business person. Accept losses when it occurs and move on. If you don't understand this thing that I just said now, you will keep sabotaging yourself and sabotaging your mindset. When the mindset is messed up, nothing works correctly. Number 2 is poor risk management. This is where a lot of traders destroy their accounts. You risk too much. One trade is not supposed to wipe your account. That's a sign of bad risk management. One trade. Even 5 trades is not supposed to wipe out your account. You don't use proper stop loss, and the some of you will go as far as adjusting your stop loss so that price will not hit that your stop loss. And you keep assuming or thinking or hoping that price will reverse. Look at this setup again. These are 2 different setups. Now, this particular setup hits my SL. Yeah. Price came, peaked, moved to this point where I put this circle and the return back. It hit the SL. It actually broke this. There's another block here. It broke the other block and the return back here because it needed to take out a liquidity under here and the return back here and it picked this. This happens after grabbing liquidities. Then the trade now peak. And this one actually moves and hits the take profit. I lost this trade, but I gained this. When you are doing this, the loss will keep widening. And at the end of the day, market will not return at that moment. That's a trade that you would have lost, let's say $50. Because you are adjusting your stop loss, you lose $100, $150, or $200. And this is something that you would have, walk away with that $50. Let me tell you one simple thing again. One bad trade should not wipe your account. Memorize this statement and repeat it to yourself. One bad trade shouldn't wipe my account. Many traders allow emotions to take over discipline. Discipline has its own part. Your emotions also has its own part. These are 2 different things. Differentiate them. Instead of risking 1 to 3% of your account size, you go as far as risking 10%, 20%, 50%. Sometimes you risk everything. I've seen a trader that doesn't even know what she is risking in dollars. She set a stop loss without knowing the worth of that stop loss in dollars. And when we try to check or to calculate, we discover that over 80% of that account is gone if the trade was actually executed. Over 80% of an account in a single trade. I keep saying this. The capital you preserve today is what will bring you back to the market tomorrow. If you don't have capital, you will not trade. You still need to go and hustle in order to raise money to fund your account. When you can actually protect this capital and continue moving gradually. Risking more than 3% of your account size in a trade is called gambling. It's not trading, it's gambling. Say to yourself, I will never risk more than 3% of my account size. The third point is overtrading and the chasing losses. You lose a trade. Instead of you to walk away, take a fresh air, take a walk, shut down your system or your trading app, you enter another trade immediately. You want to recover the money fast. Some of my students will say, I will get it back. You want to recover it fast. When you lose a trade and enter another trade immediately, with that mindset that you want to recover the money that you lost fast, what is playing at that point is your emotions, it's not logic. You are entering impulsive trade. You are revenging the market. And that is how you blow the account. Revenge trade is one of the fastest way to lose money in the market and to blow account. Because it is your emotion that is controlling you at that point. You are not taking that trade based on logics. A good or a professional trader don't trade all the time. They wait, they are patient, and they strike when the setup is clear. You don't see them in the market all the time. It is better to spend time in preparation than prepare in a haste and you go and blow your account. So when the setup is not there, wait for the market to first bring its hand, then you strike. The fourth point is ignoring liquidity and the market behavior. And this is where most traders don't pay attention to liquidity. The market don't move randomly. Price moves where the liquidity is. And if you don't understand how liquidity is built up in the market, I have a video on liquidity. Go and watch that video. You will see it at the end of this video. As a trader, you need to ask yourself whenever you open your chart, where are the stop losses? Where do other traders place their stop losses? Is it above the high or below the low? You need to identify where these stop losses are being clustered. When you are able to identify where they are clustered, you will now have an edge to know what to do, or in fact, to wait for the price to come and grab that liquidity first before you take that trade. That's your safety net. So when you are able to figure out where the liquidity is, you watch the market first go to that place to sweep these stop losses. That's when you can be able to enter a perfect trade that goes your direction. This is the exact concept I use in this particular trade I said that made me over $6K. As you can see the screenshots on the screen. I didn't just enter randomly. And that's when you see the market move exactly where you predicted. If you don't do this, the market will hit your stop loss and still go to that your direction. So when you set a trade and the market hits your stop loss before going to your direction, you also attribute it to your strategy. It is not your strategy that failed. It is actually you that is on the wrong side of the market, which is the liquidity side. This is exactly what I break down step by step inside my mentorship. Teach you how to understand liquidity so that you stop being taken out in the market, but you follow the market makers to make money as they move. The last point is that you don't have a clear plan. Some of you are entering trade randomly. No clear entry, no clear exit, no stop loss, not even a defined risk management. Only you. Why? This simply means that all you are doing is guessing. You are not trading. The truth is this: without a clear plan, consistency is impossible. Now you can see the truth that the problem is not really the strategy you are using. It's not even the market. It is your mindset, your emotions, your risk management, poor risk management, the way you react or you see the market. They are the issues here. If you can fix this today, even the simplest strategy will work for you. But if you keep ignoring it, nothing will work. You will keep repeating strategies and the cycle will continue. This is what you should start doing. Number one, work on your mindset. Start accepting losses as part of the profit. Number two, protect your capital first with proper risk management. Three, stop over trading and focus on quality setups, A plus setups. Finally, understand liquidity. Know where the market is likely to move to. This is the foundation of consistent trading. Get these things right, and your trading perspectives and results will change. If you are serious about becoming profitable and you want to be guided step by step, I have created a mentorship and community where I break all of these things down in a practical way, from mindset to liquidity to execution. Reach out to me from my bio or you check the link in the description to join my community. Let's fix what is really holding you back.